Okay, so we're now on to task 2 of the first AAT sample assessment for personal tax. So 14 marks here, and it's all about income from employment. So Dr. D and Miss B, sounds like a band, had the use of company cars during 21-22. All necessary information in respect of each car is detailed below. So we've got information, 2 people, 2 cars, quick look down, so how many months available, registration date, fuel, etc., etc. Complete the following table to show Dr. D and Miss B's taxable benefits in kind for the cars. Show your answers in whole pounds only. Right, so let's look at Dr. D first of all. So we need the scale charge percentage and the taxable benefit on the provision of the car. Right, so the percentage first of all for Dr. D. So I'm looking here, it's a hybrid petrol with an electric range of 120 miles. So let's find our car benefit percentage reference. And we can sort of see both here. So hybrid petrol with electric range of 120 miles. And it's 40 grams per kilometre. So 1 to 50, so the 40 falls in this bracket. We're then looking for the 120, which tells me the percentage is 4%. So that's going to be my answer in here. The benefit of the car, so I know that I have to multiply that 4% by, let's get rid of that reference material. So I need to multiply 4% by the list price, so that's the 26,200, ignore the cost price. But I've also got an employee contribution of 6,500. So I know that I can subtract an employee contribution towards the cost of the car up to a maximum of £5,000. So I'm going to do 26,200 subtract 5,000. Then multiply that by my 4%. Dr. D has it for the whole 12 months, so don't need to make any adjustment for that. And there is no employee contribution for the use of the car. So it's just going to be 4% multiplied by 26,200 with the 5,000 subtracted. So plugging that into my calculator, it gives me an amount of 848. Right, then looking at Miss B, so same procedure. So she's got a diesel car that meets the RDE2. Got emissions of 112, so I'm going to use my method of rounding down to the nearest 5, so that'll be 110. Subtract 55, divide by 5, then add 15, and then because the car was registered before April 2020, add another 1. So that gives me 27% altogether as the percentage for Miss B. So then working out the calculation, so we've got 27% times the list price, no deduction this time for the contribution, so 27% times 36,100 times 8/12 because she has it for 8 months, and then she does make a contribution of 120 per month. So 120 times the 8 months is 960. So I'm going to subtract that 960 from my calculation, and that gives me 5,538. So to recap, I did 27% times 36,100 times 8/12, work that out, and then subtract 960. We've then got fuel benefit for this person. So yes, private fuel is provided, no employee contribution. So let's get the reference material up. It always takes you back to where you were with this reference material. So you have to go back. And then I'm looking for car fuel benefit. The base figure is 24,600. So my calculation will be 27%, the same percentage as we had for the car, times by the 24,600, times by 8/12, because that's how long she had the vehicle. So that calculation gives me 4,428. Below is a list of benefits that Z Limited provides to its employees. Enter the taxable benefit for 21/22 for each benefit in the box provided. Whole pounds only. If it's 0, enter 0. So Mrs. L moved into a house provided by Z Limited on the 1st of January 18 when its market value was 295,000. I'm already thinking dates. Z Limited, the employer, bought this in April 2010. So there's more than 6 years have lapsed between when the property was bought and when the person lived in it. So that means that I need to be focusing on the market value rather than the cost of the house. I've got an annual value of 7,200 and I've got the employee making a contribution of £500 per month. They're in that house for the whole of our tax year. Right, so we're going to start off with the basic accommodation value, which is going to be the £7,200. Then the additional accommodation value, which is calculated for reasons we've just explained, 295,000, the market value, subtract 75,000, that's just the magic number, and then times that by the official rate of interest. So again, if you can't remember what that is, it tells us in here, 2%. So I am doing 295,000 subtract 75,000 at 2%, which is 4,400. I'm adding that to the annual value. That gives me a total of 11,600. I then subtract the employee contribution. So 500 for 12 months is 6,000. So I've got 11,600. I'm subtracting 6,000. So that gives me a taxable benefit of 5,600. Mr. V moved 200 miles due to a promotion and received 9,500 to help with his removal expenses. Well, I'm pretty sure it's 8,000, but I'm just going to check because I've got it here. But we're looking for other benefits. So anything about removal expenses here. Here we are, removal and relocation expenses. Yes, 8,000. So, and I can remember that the first 8,000 is exempt and then it's only the extra bit that you are going to be taxed on. So that would be 1,500. Miss Q received an interest-free loan of £15,000 on the 1st of November 2021. This is the only loan she has received and she has not repaid. So we're not going to use the average method here because there's no change in the amount of the loan. We are going to have to tax it as a benefit because it's over 10,000 at any point during the tax year. But we're literally going to tax it for the time she had it. So it's interest free. So I'm going to do £15,000 times that official rate of interest, which I can remember was 2%. And then I'm going to think, how long does she have it for? So all of November, December, January, February, March. So that's 5 months. So I've got 15,000 times 2% times 5/12 means that it's going to be taxed at 125. Mr. Yu received a watch for his 30-year long service award. This was Mr. Yu's only long service award, and the watch cost £1,800. Right, so again, we go back here, it's quite handy this time, it's kept it where we want it. So I'm looking for something about long service. Here we are, non-cash, so it's a watch, so that applies, long service award, and you get £50 per year of service. So £50, it was a 30-year service, so £50 times 30 is £1,500. This was £1,800, so the extra 300 would be taxed as a benefit. Right, true or false? Ms. F is a director of F Limited. She received a bonus of £2,500 on the 30th of April 21. So that's in our tax year. The bonus was for the accounting year ending 31st of March 21, which is obviously not in our tax year. That would have been in the year 2021 rather than 21-22. And I'm being asked, Ms. F will be taxed on the bonus in our current tax year. Right, so Ms. F is a director. So we know that employment income for a normal employee that isn't a director is the earlier of when they were paid it and when they were entitled to it. If you are a director, there's the added test of earlier of if it was when it was credited to the account, where there's no mention of that here, or the year end, assuming the amount was decided at that time. So it hasn't really specified that, but I think it's safe to say that because she's a director, we would go with the year ended 31st of March 21. So therefore this would be false because she would have been taxed on that in the year 2020/21. Hopefully that makes sense. HPLC pays all its employees £5 per week for working from home, as all employees now work from home for part of the week. So again, I'm not quite sure, so I look it up. So working from home, home working, looking in this list of benefits. Here we are, working from home, you get £6 per week. So if they're being paid £5 per week, then that's fine. So they will not be taxed, so that's going to be true. Next question. Mr. Y uses his own car for business purposes. His employer pays him 40p per mile, and he has claimed 15,000 business miles. And we've got to figure out whether he has an allowable expense of 250. Right, so what I would do here is I'd start by working out what he's allowed. So I know that the first 10,000 miles are at 45p, and anything over, so the extra 5,000 miles would be at 25p. So if I do 10,000 times 45p plus 5,000 times 25p, I get a total of £5,750 that would be allowed. He'd be allowed to receive that without paying any tax. He was actually given 15,000 miles multiplied by 40p, so he actually got £6,000. So he actually got £250 over what he was allowed to receive. So he should be being taxed on 250 as a benefit. So therefore this is false. They've given you the right number, but they've said it's an allowable expense. It would have been an allowable expense if it had worked out that he had been underpaid by 250, but in fact he's been overpaid. So therefore that is false.